it going. Wow, what a crazy market day. Let me know if my audio is coming in clear, by the way. I see everyone in the chat here. Sung, Lewis, Rick, Marco, how's it going, Mimi? Let's talk. We got a lot to talk about today. Inflation, macro, Russia, like you name it. Today we got to talk about it. Let me know if my audio is coming clear before I go on a spiel. How's it going, folks? Joshua, Judy, let me know, by the way, in the chat, replay as well, wherever you want. Thank you, Marco. Appreciate it. Where you're tuning in from, city, state, country, whatever you guys feel comfortable sharing. 8:58 before we start on Tesla. Yesterday's video, I talked about, crazy depth. Yesterday, I talked about levels to watch. And on the downside, I said we do not want to see Tesla close, and I pulled up my Weeble here, do not want to see Tesla close below 887. 887 was the 150, or 888 now is the 150 moving average. As we sit here at 860, let's say rounding up a little bit, it's looking like, barring a big up move, we're probably going to close down below the 150-day moving average. And the reason why that's significant is because 150-day moving average has been respected multiple times, especially as of late for Tesla. Tesla bounces off of it. Buyers show support off of it often. But in the midst of what's happening in the macro markets, if you look at the NASDAQ, it was down 3% today. It's at 2.8% right now as I sit here. S&P 500 is down almost 2%. And again, this is because of Russia, Ukraine, war, fears of war, all that stuff happening. So we're going to get into it. But first, let me read out some places. Los Angeles, Germany. Fresno, how's it going? Toronto, Belgium, Guatemala, Sweden. Awesome. South Carolina. I'm going to try to pronounce this one. McKinleyville, California. Hopefully I did that. Let's see here. Gilbert, Arizona, Chicago, Austria. Folks, how's it going? Okay, so we got some just quick technicals to look at before we get into kind of more of the fundamentals here. Since the 150 days kind of, for the time being at least, come and gone, the 200-day is kind of what, barring any sort of positive news, which is hard to come by in this market right now, barring any positive news, maybe towards, Austin, Berlin, that sort of stuff, the 200-day is, at least seems on deck. That sits at 824. So, but that being said, the Juju Power Hour always brings good vibes. You never know if we can reclaim that 150 moving average. Hopefully we can. Netherlands, Fremont, Nebraska. There we go. Lathrop, Kathmandu. Wow. Got people from Nepal in here. In a Starbucks in Los Angeles. Go Rams. Yeah, Super Bowl weekend this weekend. I don't watch football. You guys know that. But we got a Canucks game tomorrow. You guys are right. I need my oranges. I totally forgot them in the living room. Give me 1 second. Give me 1 second. Drastic times call for drastic measures. I got a big pack here. Probably, it says 3 pounds. It's got to be like at least like 20 or 25 of these. All right, let's get into Juju. And if you're new here, I have no idea what I'm talking about. By the way, folks, we're rallying here a little bit. Okay, I mean, we'll take it. On days like today, let's rally to the 150 moving average. Let's close above there. We still got some work to do until then. But if you're new here, you have no idea what the Jujus are. Jujus are good vibes. It's an inside joke on the channel. Go grab yourself a citrus, citri. I think that's the plural, right? And consume some citrus. I think you need it, Johnson. I think you need to eat the 25 oranges. Yeah, I might need to at this point. Okay, let's go. All right. Okay, let's do it. Thank you, Lewis. I appreciate that. Where's the 200-day moving average? That's at 8. What did I say? It's at 825. 825. Okay, so let's talk about what's happening in the world at the moment. You kind of name something and you name anything, and there's something wrong at the moment. Inflation came out yesterday, 7.5%. Crazy inflation numbers. By the way, I'm going to do a segment in this live stream. Remind me if I forget. About can stocks rally during times where inflation is, let's say, out of control, or the Fed fund rate is being increased. I'm going to do a section on that. I've got some data put together there, or at least charts. Awesome. Okay. But Inflation came out yesterday. CPI number came out 7.5%. One thing to take into consideration here is with inflation, I believe it is January, could be December. I have to double check, but I think it's January when a lot of the goods, a lot of the basket of CPI core gets reweighted. And if a reweighting happens, I haven't checked this, but if a reweighting happens, like we've kind of seen it here, pull up the 1 minute here, 1 second, 860 on Tesla, then you can see somewhat of a mixing of a conflating of CPI indications. So that's one thing to keep into consideration. Now, don't get me wrong, 7.5% inflation is out of control. It's just nuts, 7.5%. The Fed is, again, been saying this for a while, stuck between a rock and a hard place. They want to increase rates. I think yesterday we kind of heard as much from the Fed. But if they increase rates, they go ahead and do that. There is still a question about how is the economy really doing? Employment, you could talk about unemployment numbers. I personally do not really trust a lot of the unemployment numbers. I never really have given them a lot of credence. It's all that we got. But you got to remember, especially during the pandemic, after a certain period of time, if you're unemployed and you can't find a job in that period of time, or you just don't get a job, you're no longer part of that statistic. So those numbers are a little bit, troubling still. The economy is still doing well in respect that it does feel like goods and services out there are being bought. Demand hasn't subsided to the effect that inflation is still roaring. But really, as we sit here with inflation at 7.5%, it's just a bad look to have 7.5. And really, like, the cat's out of the bag a little bit. The reason why you got to also remember why the government really, the economy cannot have 7.5 inflation in perpetuity. It's just not feasible. You got to remember government wage, a lot of government wages are CPI tracked. So 7.5%, you got to think about extra government expenditure there. Inflation is just more than 2% inflation just sets the wrong expectations. And you can't have deflation or disinflation. You can't have disinflation. You can't have deflation to combat some of this 7.5% inflation numbers that we're having here. So that's bad. And then we talk about this, and this is, I guess, I think should be given a little more credence, is a lot of the supply chain issues that we're having, right? Emmanuel, how's it going? A lot of the supply chain issues that we're having, there's trucker protests happening here in Canada. It's kind of all around the world at this point. Like these, and Ford came out, GM came out, Toyota came out, and they're closing these factories because of shortages in goods, in people working. Overall, this is kind of destabilizing the economy already as it is. And then on top of that, in case you wanted a 3-layer cake, add on Russia and Ukraine, and you could call it for now just maybe showboating. Hopefully it is, but it's never good when it feels like we're this close to the brink of war. You could argue that this is all just showboating and really nothing's going to come out of it. I hope you're right. But it's just never a good. It's never a good experience, obviously, when lives are at stake, or just when there's geopolitical risk out right now. So you can talk about Tesla. We can talk about Tesla, how awesome we think the fundamentals are. But at the moment, for the last 1 month here, macro has trumped everything. Macro has trumped everything. Qs are down almost 3% on the day today. 860 on Tesla. It's quite honestly, it's just everything feels like it's on. And actually, yesterday I tweeted this out. I said, if you haven't done this already, I always feel like with Facebook, I'm not sure if you guys feel like this with Facebook, or if you guys watch TikTok or Instagram, everything's served to you with these algos in mind, trying to get the highest retention and maybe trying to feed you certain info. If you haven't done it already, on your Twitter feed, if you use Twitter, try to sort by latest tweets first. And that way, at least what you're being served is in chronological order. So, yes. Yes. No, it's not even that the US. It's not even that the US is. I saw a comment here saying the US is not on the brink of a war. Russia and Ukraine are. You got to remember the ramifications worldwide when it comes to war. It's not just two countries involved. Usually, it brings in parties, allies, all this sort of stuff. Again, I don't want to get into the war thing too much because hopefully a lot of this is showboating, but you can, it's hard not to see how this is not spooking the markets. If you look at the VIX, this is the daily VIX graph. So we are back close to $30 on the VIX. So obviously volatility is high at the moment. 859 sit on Tesla. And we have CNBC up as well. In case we want to pull it up, they're just talking about crude oil prices at the moment and kind of what's happening there. Did I see Elon's tweet? I think I did. Which one was that one? The reversing on FST? Let's see here. Let me pull up my Chrome. Where is my Chrome? Okay, let's see what Elon tweeted here. The duty of a leader. Oh, let me move my fat head. Hold on one second, folks. The duty of a leader, Elon says, is to serve their people, not for the people to serve them. What else is he saying? He also tweeted back at Holmars with the FSD video, beta video, saying a car should also reverse slightly if it peaks into an intersection and sees fast-moving cross traffic just like a person would. So there's that. When we talk about algo flow, we'll talk about that for a hot second, but really, bearish sentiment altogether. I don't think we need algos to tell us that. But in case you're wondering with options flow, let's take a look. Wow, Nvidia is down 7% on the day. Wow, I did not see that. That's crazy. Let's see here. So algo flows coming close to the zero score on the algo, but there's still a bullish divergence there to be had. But more and more that divergence is coming down. If you look at daily premiums in the options market for Tesla, it seems like the brightest squares are on the March 18th. It seems like there is some sort of a strangle, or I guess this is a debit spread, or a credit spread, pardon me, made from the 880s to 890s. Interesting. Okay, we'll keep in mind of that. 859 sitting on Tesla. Yeah, well, GLD is climbing. You're right. If you look at gold, what's gold at now? GLD, the spider, gold shares are up 2% on the day, of course. What's interesting as well is, like, if you look at Bitcoin, right? Bitcoin is not seeing strength really, based on kind of the situation that we have going on. So, yeah, it's again, I guess you could argue it's high beta. So let's see here. Let me try to scroll on this. Manuel says, if anything can rally in a recession, Tesla would be one that does. That brings me, thank you, Manuel. That brings me exactly to I want to talk a little bit about stocks rallying, not rallying during times when the Fed is increasing rates. So I'm going to turn off some of my indicators here on TradingView. Let's turn off all of this. And I'm going to pull up Apple just for the sake of having a long-standing amount of data on a stock. Apple is one of those stocks that you can pull up years and years and decades worth of trading data for. And then on top of that, I'm going to add in a couple of things. So first thing I'm going to add in is the Fed fund rate. And those are interest rates by the Fed, of course. So you can see here in 07, 08, right before the crash, interest rates were, Fed fund rates were 5.5, 6%. Obviously, after the recession, during the recession, they came to rock bottom levels, started raising them a little bit in 2015, 16, 17, all the way to 19, dropped them back down, the pandemic, and then now they're rock bottom levels again. Let me just actually bring it's more relevant for me to be over here. So let's talk about this for a second. And I'm not saying a recession is coming, but I think it's important to at least explore the possibility and how the market could potentially react to something like this. So I have Apple pulled up here, and then on top of that, I want to pull up interest rates or inflation rates. So this is inflation, CPI. It's that green, more solid line that I've overlaid. Again, apologies for all of these subgraphs in here, but I think I want to be able to look at how equity prices, and I'm proxying that through Apple, how equity prices have done with compared to Fed fund rates and dampening inflation. So just general observations. Obviously, whenever rates are really high, like right over here, when rates were 5% in '06, you can see after a little bit of a lag, inflation came down. Same thing here. Rates were at the highest in September of 2000. And then after a little bit of lagging, inflation went back down to 1.3. 1.3. So right now, if you look at that green line, pull it up here. If you look at the green line and you see how far inflation has gotten, right? How far the cat's out of the bag a little bit on inflation. And you look at our Fed fund rate, which is 0.08. It's 8 basis points right now. It's pretty much zero. And we look at how to dampen inflation. Yes, you can turn off the money printer. You could stop a lot of the quantitative easing. But really, this is a problem that happened in the 80s as well. Really, and Milton Friedman would tell you this, really to bring inflation back down, you're going to have to increase the rates substantially. Now, the issue is if you increase the rates in what is, if you can argue a weak economy, and I know I see some comments here saying that the economy is booming, so we can explore both sides of that. If you make the mistake of increasing rates in a really weak economy, then of course that's a policy mistake. Now, if in theory there's so much money out there, so much demand out there, that inflation is this high and you increase rates, great, you just bring down demand, awesome. But the problem that we're having right now is because of the virus, because of whatever supply chain issue out there that you want to name, protests, people off work for XYZ reasons. It's kind of a double-edged problem at the moment. So what I wanted to bring up is in times when, for example, and the dot-com bubble is a little bit different, but let me pull up equity prices here. During the period between March of 2005 and January of 2008, we can see that, or actually it's probably a little bit before then, May of 2004 is when rates started going up. When rates started going up, let me just make the equity line a little bit easier. Let me turn off inflation. Again, that blue line is the Fed fund rate. What's the interest rates? And so if you look at when they started raising rates in '04 all the way, and you look at Apple during that time, and let's just pull up that return between June 2004 when they started increasing the rates from basically 1%. All the way up to 5%. Apple returned about, and again, you could argue Apple's not a good proxy. I think it is, but let's pull it up here. Apple returned pre-split numbers, of course. Apple returned from $38 all the way to $68, or it's saying 1,300 days, a 2,000% return on the stock of Apple. I could pull up the Qs instead if I wanted to, instead of Apple as well. And if I do that, let's just see how the Qs did. From that period of time, the NASDAQ ETF returned, hold on. This is actually massive here. Returned from about $35, $37 in the indice at the height to about $54 on the Qs. So during a time when the rates were increasing, there was appreciation in certain equities, not all of them, of course, but in tech, at least we can see when we overlay something like Apple, there was. And so stocks can rally during times when interest rates are going up, but not all stocks will. Especially what you'll see hurt the most are stocks, of course, this is news to none of you guys. Stocks that don't have earnings power are going to be hurt the most, right? Let me just read some comments here. Let's see here. And so, okay. John says, I work in purchasing, and as soon as supply chain is managed, I have multiple places to buy from. I'll be aggressively searching for lower prices. There's going to be a glut, I think, of a lot of supplies soon enough. The question really is that going to be in the middle of this year or towards the end of this year? I think there's a lot of also talking with local small business owners as well. there's a lot of congestion at the local ports, is what I'm hearing when you talk about supply chain issues. 855 sitting on Tesla. But fundamentally speaking, okay, I still think Tesla does, let's say, $13 EPS this year. Tesla does $13 EPS this year. And let me pull up my calculator on my computer here. If Tesla has $13 EPS and they're currently sitting at 856, it's about a 65 forward PE for this year on a year, let's say when revenue growth was 87% year over year. So still a peg of, let's say, less than 1, if not 1. But again, none of this matters. None of this matters when we're talking about macro. But this too shall pass. Everything around macro, fear of war, fear of supply chain issues, all this will pass. There's a lot of money out there. If you look at M2 supply, money needs a place to grow in companies that can grow that money. But during times like right now, there's a lot of money off the table. Someone said, can you see how rates affected Tesla in 2018? Sure, I can pull that up. And I haven't seen it myself, but one word of caution here to have is Tesla is a different company back in 2018 than it is now. Because again, earnings power makes a big difference on it. So in 2018, let's say 2017 or beginning of 2017 when the Fed started increasing rates till they stopped, of course, is from January or during the pandemic. Of course, we know Tesla was trading at, this is pre-split, $29 a share. And then right when Shanghai was coming online, January 2020, right before the pandemic, we know where it's saying about $45 pre-split. So, oh, pardon me, I'm reading the wrong line. Hold on one second. It was $45, like I said before, when they started raising rates. And then it had a really decent rally. But for much period of that time, it was just trading flat, as we know. But towards the end of that Fed, or at the height, maybe I should look at the height. At the height of the rates, Tesla was trading flat, essentially. It never substantially sold off, even during the rate hikes. But flat at best, really, until that Shanghai rally that we had. But remember, Tesla is a different company now. So someone says no audio. Is my audio off? Let me know. I think I see audio coming in. Okay, thank you, Jen. 856 currently sitting on Tesla. Let me pull up CNBC. Let's see what they have to say.
That you're trying to attack here, but we've got a big sell-off here late in the final hour of trade. So we'll leave it there for now. Thank you, CEO of Under Armour.
Thank you, sir. Thank you very much.
Melissa.
We've got just about 37 minutes before the bell rings on Wall Street. We're off the session lows, but we're still looking at pretty steep declines across the board. The Dow is down by 1.4%. S&P 500 down by almost 2%. NASDAQ is down by 2.8%. Under the surface, there are some big moves lower, like semiconductors. They're down about 5% right now. Still ahead, Eurasia Group President Ian Bremmer on how increasing tensions between Russia and Ukraine could impact the market and the global economy. Stay tuned.
All right. We'll keep an eye on that as to what they got going on. Remember, everything right now is essentially macro related at the moment. So I'm going to eat another orange. 856 on Tesla. You know, sometimes I just feel like if this is going to sell off to the 200-day or past 200-day, get it over with. Just get it done. Obviously, the stocks don't move on our timeline. I'm just half kidding, but just get it done. Like, just get it done. Sell off if you need to, recoup, generate steam again. But a lot of fear in the market today on a Friday. Let's see how the weekend pans through. Let me know in the chat, what are you guys planning for next week in the markets? Are you guys hedging your portfolios today? Do you guys think we're at max fear around everything and on the weekend it'll blow over? Let me know your thoughts. Let's read some out. Harry says, I'll buy some of the 200-day SMA. Fair enough. That's at 828. Let's read some. Waiting for 750. Okay, 750 would be quite the sell-off. That's where my blue line is there. Puts, Chandra says, not doing nothing, holding. Sam, I'm kind of in the same boat. Obviously, with my shares, I'm not touching those. I actually just sent a text to Avi. Hold on. She wants to buy some. Let me just see, because yeah, we'll see. 857 cent on Tesla. Buy and hold them suck. But back to my point. But my options account is just nuts. I'm what I need in my options account at the moment is a big short term pump up that I can recoup. This sounds terrible, but I can recoup some on, and then at least try to convert to longer dated stuff. I have some March 2023, small amount, far out the money. And then April is really what's killing me. April, and I saw a comment here, when do China numbers come out? I think China numbers come out, I read on the 14th or 15th. So next Monday or Tuesday is when it happens. So we'll see. Dirk said, I converted my shares to Leaps. Okay, Dirk. Spreadman says, Monday will be green after EV ad overload during Super Bowl. Yeah, Super Bowl weekend, lots of EV commercials will be out there. Look, we could talk about fundamentals. And folks, what is happening with Austin and Berlin? We know, right? Berlin, we know, middle of March. That's what everyone is kind of saying. What's happening with Austin? Can someone fill me in? What is happening with Austin? Jason, how's it going? They need to open already. Yes, I agree, of course. But as is life, things don't go always our way. John says this is a knee-jerk reaction. Monday should be amazing. Let's hope so. Yeah, why is Austin so delayed? Yeah, for sure. Sung says they need certification. For sure. But what has taken as long? But here's the thing. If you look at the drone footage coming out of Austin, people are there, right? And the amount of cars there are in the front, too. Joe Tegmeyer has a great channel on this. He does that. Oh, yeah, Tesla still can't sell direct into... Hold on. She just sent me a text here. She's about... Hold on one second. I'm just trying to help her. How many share? Let me just do that. She almost put in... Avi's very new to investing at the moment. So we're working with... I finally have gotten her on the dark side a little bit to start actively doing it herself, like investing, and me just not having to click everything for her. So she's at work right now. And there's like a Canadian version of Tesla that kind of it mirrors Tesla one for one. It's a Canadian version, so you don't have to hedge. You don't have to take currency out and switch and all this sort of stuff. I told her to buy 1,000, X amount, and she put in that as the quantity. I was like, okay, no, not that much. Let's see here. Oh, hold on. I saw a good comment. Casimir says, how's it going, Casimir? It says, everyone is spreading misinformation about Berlin Austin opening in Q4 last quarter. That got the stock 1,200. Rob Meier is saying they won't even open in Q1. Did he say that yesterday? I don't know. But here's the thing. All big money was betting on Austin and Berlin. I'll show you exactly where, too, on the daily. Like, right around, of course, that run up that we had in end of October, November. If you were, you're reading out there retail information about Tesla coming online, it really felt like, okay, it's imminent at this point. That was when I think a lot of people were saying, hey, I think Tesla's going to hit $1,000. Tesla's going to hit $1,000. That was when Tesla was at $900. So it felt like almost everyone was thinking, okay, Berlin and Austin are going online now. And then as soon as it kind of feels like that has died off, obviously. Now, who's to say when Austin and Berlin open? One thing is true, though. There are workers at Austin, right? Substantially so. So Sorry. Thank you. My fat hand just pressed it. Appreciate it. Thank you, folks. Kai answered your question, hopefully. It's Tesla.to or Tesla.ne, depending on your broker in Canada. It's like a Neo product, a Neo Financial. Don't even know what they are, to be quite honest. But I do have a friend that works there at Neo Financial. So, sorry, folks. Folks, it's one of those Fridays, okay? Sorry. It is what it is. I got fat hands today. I'm trying to eat juju while we talk. 856 sitting on Tesla. The shop, new member to your channel. Since there's no live talk with Meet Kevin, it is what it is. I'm not selling my shares. I appreciate your super chat and your donation, and welcome to the channel. Appreciate it. Catch you over on Discord. Cut up that fat hand. Yeah, honestly. Okay, let's do it. Okay, so let's see what CNBC has to say, shall we, for a hot second?
Like that. Apple's the one stock that really continues to hang tougher than the other ones, meaning it's not really that far off of its highs. We'll see if that changes. And to me, it is just about investors not being as confident in buying the dips, partly because they're losing money on their bonds. And so if you talk about a portfolio effect, if you're taking losses on the fixed income side, it just creates that much more stress and less room to maneuver when it comes to taking on equity risk and maybe being opportunistic and buying into some of these dips.
Yep. Dow's down 1.4%. NASDAQ down by 2.8%. Again, broader market sinking here over fears that Russia could soon take military action in Ukraine. Kayla Tausche's got the very latest on this story. Kayla.
All right, let's see. Let's see what they have to say.
Melissa, just a few moments ago, President Biden departed the White House. He was speaking with staff and making his way to Marine One. He's headed to Camp David for the weekend, accompanied by his top staffers. He's expected to spend the weekend evaluating the evolving intelligence on the likelihood that Russia further invades Ukraine. Earlier today, National Security Advisor Jake Sullivan said a military operation could begin before the Olympics conclude on February 20th. Intelligence pointing to an air campaign followed by a ground invasion, with Russia aiming to seize significant amounts of Ukrainian territory and conducting a rapid assault on Ukraine's capital of Kyiv. Congressional aides briefed on the matter tell me if Putin orders an invasion, they believe it could happen as soon as this weekend.
Oh my
Sullivan
God.
warning Americans in Ukraine to leave in the next 48 hours, warning that the government will not be conducting an evacuation effort, and saying today the risk is high enough and the threat is immediate enough. Melissa and Sarah.
Kayla, what do we know about communications and any collaborations here on the response, coordination, I should say, between the U.S. and other NATO allies? Europe.
Well, we know that earlier today, for about 90 minutes, President Biden convened a secure video call with NATO allies ranging from the UK to the European Commission to Poland and Romania. And they discussed the intelligence that the US and also the UK have both been receiving and really leading the pack on this. I'm told that the UK believes that the risk is just as high as the US believes it is. And that there is shared intelligence and a shared belief about the Russian posture across many of these NATO allies. So certainly there is a very strong belief, and they are coordinating on the various sanction packages that each country is putting together. Of course, they have varying levels of trade with Russia, so they are going to have sort of bespoke packages with how to deal with this if Russia does in fact invade. The U.S. has been warning of swift and severe actions. Earlier this week, President Biden, standing next to the German chancellor, said that if Putin invades Ukraine, the Nord Stream 2 pipeline will definitively not go forward. They're trying to say that the cost will be too high for Russia if Putin invades, but he could make a different calculation.
Kayla, thank you. Kayla Tausche in Washington with the very latest. Energy, meantime, the best performing sector, with oil hitting its highest level since 2014, rallying by almost 4%. Joining us now by phone is Paul Sankey, lead analyst.
All right. Just overall, just not good. Not good. Forget about the markets even for a hot second. We're talking about lives at stake, right? Like that's really what matters the most. Don't mean to laugh. It's comical. Like, what is happening at this point? It doesn't feel like there needs to be any sort of aggression right now. It's just in the world. But, it's weird. Like, I'm Canadian, obviously. So I have, thank you, Judy, for the super chat. Appreciate it. I'm quite reserved in my way that I speak about American politics because I'm not an American. So what business do I have poking in? One thing I'll say is, judging by comments, judging by people that I talk, my American friends, you guys, everyone, it really feels like no one wants to go to war. So when you see stuff like this pop up, and granted, we don't know all the inside baseball as to what's happening, and maybe we're not deserving of that information. I get it. It just doesn't feel like like you find it hard pressed to find anyone that it feels like this is a great decision. There's just so much happening in the world right now, folks. That's just part of it. Olympics are happening as this is going on. You talk about rate hikes, inflation out the wazoo. It's just nuts. It's nuts. Oh no, folks. Someone said it's distraction. Yeah, I don't know if it's distraction. I don't know what it is. You got to be careful of this sort of stuff. But let's be real. No one wants to go to war. At least average people that you talk with. So, Michael says rising interest rates, supply chain issues, COVID, war, perfect storm. Yeah, I guess I named inadvertently. I named my video yesterday "Calm Before the Storm." It's not aging too well, or maybe it is, but not in the good way. Mark says we like to play hockey, have kids, and grow old. Hockey it is, my friend. Hey, Mark, are you a hockey fan as well? Let me know what was your team. Okay, 856 off of politics for a second. 856 sitting on Tesla. Folks, S&P 500 is down 2%. The Qs are down 3.2%. This is the daily graph on the Qs. Of course, we have been slapped off the 200-day like no one's business. 3 times, 4 times in the last week and a half here. And so now the question is really, do we head back to the lows that we had at the end of January? So to be determined. This weekend is just, I want to be bullish on next week, but with the weekend and everything that's happening, it's just so much uncertainty, of course. And that's why we're seeing VIX up at over $29 right now. So Stefan's a Bolts fan. Yes, Stefan, we get it. You're one of the best teams in the world. Whatever. Stamkos is one of my favorite players. Not anymore, as he's growing old and injury prone, but when he got drafted, for sure. Does that make me a bandwagoner? I don't know. Let's see here. Flames. Oh, Leafs. Oh. Okay, so here's another thing that I want to clarify if I can. I saw some tweets coming out yesterday, some videos on YouTube saying that there's an emergency Fed meeting happening and that this has never happened before. Does this mean that, Mark's an Oilers fan. Oh, yikes. I saw today what happened with Speck and McDavid. Anyways, I saw a Fed meeting, emergency meeting, clickbait stuff everywhere. Remember, this happened as well in January. It's not out of the norm, right? So, but at the same time, that's not to say an emergency rate hike might not happen. It very well could happen, but that's not the point. The point is that this meeting in and of itself is not nefarious. It's not a one-off thing. It has happened in January and probably before that as well. So, Michael says, just signed in. What's happening? Why is VIX shooting up? We have 20 minutes to close here, and it seems like Russia and Ukraine narrative is owning the markets. Everything is owning the markets. And so you talk about uncertainty, you talk about risk-off environments. Well, we're in one of them right now. Oh, yes. Infiltrate says, are we going to play our Tesla closing price guessing game? I'm guessing you're referring to that. We'll play that game in 5 minutes. In 5 minutes time, I'll have every one of you guys watching guess Tesla's closing price to the penny. And remember, Price is Right rules, but I'll go over that in 5 minutes. So get save your guesses until then. And judging by the way Tesla is moving right now, you're probably going to want to wait another 5 minutes before we guess this. The chess master, you just made me. I appreciate that. Chess master, are you bullish on? No, I'm saying as much as I want to be bullish on next week, it's hard to be bullish on next week, is what I'm saying. Given what's going on, so. Winner gets a new Tesla. No, unfortunately not a new Tesla, but some virtual juju for sure. And on that note, I'm going to open up another citrus. Okay, let's see here. Singh says someone Ukrainian posted this on Tesla Motors Club. Yes, I saw that, and it's basically someone saying they don't think a war is likely or a large-scale invasion. 851, folks, new low of day on Tesla and pretty much on the markets. Wow, the Qs are down 3.5% on the day. Wow, just bleeding everywhere. Great American has gone. Great American says, hope Tesla Giga Shanghai January numbers will help Tesla Monday morning. As much as first of all, I think they might come out Monday night even. I wouldn't bank on them this weekend for sure as a fact. But let's say if they came out and Shanghai numbers were 80K, right? In December or in December, they were 70, right? Let's say they were astronomical at 80K or something. Export plus sold, right? Awesome, fundamentally speaking. The question is how much of that is going to be offset by what happens on Monday morning with macro. Macro is the leading conversation at the moment, and not even Fed, not even inflation, not even Fed fund rates. We've moved on from that point onto what is the Russia-Ukraine story. So. Says, I think Austin is suffering from part shortages. I think everywhere they're suffering from part shortages for sure, or maybe you're implying that that's why they're not opening. Perhaps, but yeah, I mean, there are a lot of cars parked out front, but again, we don't know if they're 100% fully done until we have them, or until we inspect them, which no one's going to be able to do. Richard says, hi, how's it going? Just woke up from my coma. Anything new? Nothing new, my friend. Jealous of that coma. Rob says, views on Tesla in the long run. Nothing has changed in the long run for me on Tesla. Inflation, Tesla has pricing power with inflation. Tesla has shown that they can continue to up their prices and demand doesn't subside. Tesla has shown that with battery manufacturing and raw materials, they really are the most vertically integrated EV supplier out there. So fundamentally speaking, nothing. It's just, of course, sitting here at 853 now. Down 35% in the last couple of months, I guess, as is the market. But yeah, this too shall pass in the long run. We'll get our factories if you can't get parts, says Nick. Yeah, for sure. Yeah. Let me see here. Well, I mean, Elon said chip shortages are really what's hurting them this year, right? Oh, okay. Let's do it. Tesla closing price guesses. Leave your guess of Tesla closing price in the next 15 minutes as we close here. Remember, try to leave it on the penny because, it just increases your odds. But Price is Right rules. So if you are even a cent over, you can't win. Closest person at or under will win. Virtual Juju, I'll throw an orange at you or something. Paul says, it's my birthday, so you get the presents. I will much Juju for whatever Yashu prizes for the closing. I appreciate that. Happy birthday, Paul. Appreciate that. Not needed, my friend. Don't worry. But happy birthday to you. Sung says, usually January numbers are not good in Tesla due to New Year breaks. Chinese New Year break. Which days? How many days does anyone know off the top of their head? How many days was Shanghai closed for Chinese New Year? All right, here's all the guesses coming in. Awesome. A lot of guesses coming in here. Jay Liz says, thanks for hosting that show. Appreciate you tuning in, folks. Folks, you could be anywhere right now, but you're here watching Tesla in the markets with me. So I appreciate you guys tuning in. Hit subscribe if you're new. Jay Liz, thanks for the super chat too. Appreciate it. What's the line in the sand? Well, I think the 200-day moving average has to be it not line in the sand, but really when you talk about bulls defending any sort of zone. And bulls are out the window in this market anyways. But if you talk about any sort of line in the sand at the moment, after the 200-day, we're going to have to reevaluate some other levels, but really it's 200-day right now at what, 825, I think it was. So Ganesan says, Yash, we have trade war, supply chain problems, Ukraine war, China ban is adding to inflation. China ban, I'm not sure what that's referring to. If they're corrected, inflation will moderate. No need to raise the rates as well. I think rates are going to have to go up for sure. It's just going to happen. The question is how much they're going to happen, and how much of that is priced in is really what matters. But rates are probably going to go up, just because you can't have inflation be this rampant even for a couple months. So I think they're going to raise rates for sure. It's just a question of, is the market already pricing in too many of those? So, okay, a lot of good guesses here. Let's go. No audio. Someone says no audio. Is my audio? My audio I think is okay, right? 10 days of closures, Dan says, but some crews did work. Okay. I wonder if they stockpiled stuff or anything like that. Oh, Caesar says, yeah, check to see if you have anything you need to close or roll. Thank you, Caesar. Appreciate that, my friend. Thank you, because you guys know I get a little bit preoccupied with the stream. Sometimes I like to convince myself, okay, I have nothing for today. So sometimes I like to convince myself that by me streaming, I'm not making trades or, I'm not taking up on opportunities. But really, if I'm being honest, the more you trade, the amount of over trading you do, the more money, well, at least me, I can lose. So maybe you guys are saving me money. I appreciate that, Caesar. Thank you. Mimi's counting the countries. Mimi says that we have friends from 16 countries watching the stream today. Thank you for counting, Mimi. Appreciate that. It was 19 last week. Although someone said North Korea, so maybe you want to discount that. Maybe it was like 18, but still. I'm not saying North Korea is not a country, by the way. I'm just saying that I don't believe that person. 857 sitting on Tesla. A little bit of a rally, if you even want to call it that. $5 here towards the close. Wuha said there's one shift working. Okay, Jen. So maybe some production there. Richard said dead people do their best in the market. It's funny because I think you're actually referring to that, like a study, probably the same study that I saw from Fidelity, of like some of the top performing portfolios out there, if you hold stocks and not options, are just from people that have left it and not logged in to their account. Bobby, appreciate you. Thank you for being my emotional support Canadian. Thanks, Bobby. I'm glad I could at least be some positive vibes on a Friday here. 10 minutes left till close, folks. 8:57 sitting on time. Oh, what's my guess? I didn't even put in my guess. I'm gonna say we close at. All right, I'm gonna say shorts are gonna close here. And I'm gonna say we're gonna close at 869. I'm gonna say we're gonna close at 869, our 150 moving average. Probably a little bit delusionally bullish, but we'll see. Fine. I'll revoke my guess. It's I do have a slight advantage there. Thank you. Hey, Judy, thank you for the super chat as well. I appreciate that. You're definitely positive vibes. I hope I can be. Okay, 858 currently sitting on Tesla. Let's see here. This is the 1 minute graph. We're going to be hard pressed to get over 860. Let's zoom out for a hot second. Again, 150 moving average has broken. The last time we broke that was 27th of January, which then we promptly the following day revisited the 200 moving average, dipped a little bit below as well. I mean, substantially below, maybe $30 below. And then buyers came back and bought that dip off the 200 day. So keep that in mind with shorter term stuff. That stuff is not looking like bulls are not winning at this point, obviously. And 200-day moving average seems like it's probably imminent, barring a really awesome weekend worth of macro news, which I don't know how that happens. hopefully I'm wrong on that, and futures are really green. But we'll see. Again, you never really know what happens on the weekends for sure. There's always that risk. There's a lot of, and I think there might be some shorts closing here before the weekend, but I also feel like there is going to be a lot more hedging in the last 10 minutes here as we go. Uh, 200-day moving average is 825, something like that. Let's see here. Andy. Okay, 860 on Tesla. 860 on Tesla. Hold on. CNBC talking about rate hikes for a couple seconds.
Are acknowledging it, and they're just going to have to keep talking and acting more hawkishly, which is always problematic for risk assets, as real yields have been rising until very recently. So it's a tough environment. There's no one's making any money.
Craig, we were talking to Jan Hatzius of Goldman Sachs earlier in the show, and he said, the danger of doing a March 50-point rate hike would be that the market will start pricing in other 50-point rate hikes on the back of that. Is that your take on that, or do you think the Fed should go ahead with a 50? Rip the Band-Aid off, because we've got 7.5% inflation, and the Fed is still buying bonds, and we're at 0% interest rates.
Wow, they're tapering that out.
I wish we had that luxury. And if we were back in September, we would have that luxury to debate what is better. But as the video just said, and I've been on tape since August, is saying we are behind the curve. I called for 7% in August of last year and said that the Fed is either going to be proactive or reactive. I don't think that they have a choice, particularly given the jobs number we've just seen, particularly given the inflation number that we've just seen, and that they are so late in the cycle to try and offset this in a more diplomatic way. And so I don't really think that they have a choice, and I don't think that it's priced in at this point. I don't think that they have the luxury of weighing what the markets are going to digest in a palatable way.
Mike, the market's gone a pretty long way into pricing in a bunch of hikes this year. Where are we? 6 hikes?
Absolutely.
And also increasing
Oh
odds
God.
of a 50 basis point one coming in March.
Yes.
The market. So
exactly.
does that mean that the risk potentially is for the markets to do well when this actually starts to happen?
If it's not incrementally worse or less certain, I do think if there's some confidence about the path, there's no way we go into the March FOMC meeting with there being a tremendous amount of uncertainty as to what's likely to happen. I think, in fact, next week, there's a ton of Fed speakers out there. In addition to Bullard, I would guarantee all of them, probably including Bullard, are going to be less hawkish than Bullard was yesterday, right? So I think there's going to be a massaging of this story. And as to Gudlock's idea, the Fed's behind the curve, there isn't one curve. The curve isn't drawn yet, right? We don't know the path of inflation. We don't know how far you have to go. And this Fed has told you it was not going to be preemptive this cycle. So I don't think that really tells you much of anything, except that, yes, probably 7 live Fed meetings this year. And that's probably the makings of a little bit of suspense each time. But to me, it's not the story. And the market, you're right, has gone a long way. Credit markets have wobbled a little bit. I think that's a little bit of a concern alongside. But also, one final thing. Since the CPI number yesterday, we haven't gotten anything that would make the Fed incrementally more hawkish, right? You had a bad consumer sentiment number today, yes, mostly because of inflation. And, of course, you have the uncertainty with Ukraine. So I think that you have to just be open-minded about what they're doing, because they haven't figured it out yet.
The only thing that really happened was James Bullard opened his mouth, Sam Stovall. I mean, we recovered off the CPI print, and James Bullard's going to open his mouth back up on Monday.
She looks pissed.
I'm wondering, how do you think the Fed regains the policy narrative, if you will, in the coming week with all the Fed speakers? Do you think that they get a mandate to go out there and talk the markets off the ledge of a 50 basis point hike?
Oh.
Well, I think what they're doing is floating trial balloons to see. First, it was Bostic talking about the possibility of a 50 basis point hike in March. Next, it was Bullard talking about 1 full percentage point by July 1st. So
hey, we're rallying,
they're
folks.
Really sort of preparing.
All right, hold on. All right, Tesla's round a little bit to close. Looks like some short covering, probably. Would be surprised if this was real bullish sentiment coming in. Jurgen, sorry. Thank you for the super chat as well. I appreciate that. Good juju indeed, my friend. Okay, 865. Folks. All right. I mean, look, listen, 887 is kind of the 150 that we want to hold, but in this market, beggars really can't be choosers. So I guess we'll see if this is just, I mean, volume is pretty decent as well on this. I'll pull up the 5-minute here. I mean, volume's pretty decent. I mean, it's not bad. It's, well, in the last, 5-minute candle here, 500K, 560K shares. Decent buy volume here. So we'll see where we go. So, what I found interesting right there, did you guys notice, like, even CNBC is kind of getting annoyed at, like, Bullard. By the way, Bullard is one of the most hawkish, right, Fed members out there. Neil is one of the most dovish, I think, if not the most dovish Fed member out there. So you have all these Fed members coming out. All of them, it's kind of like double speak a little bit. You know, one person will say this, another person will say that. They're all trying to figure it out at the same time. They're trying to see how the market reacts to this, how the market all of this job owning from the Fed that we saw the other day is intended to increase yields. Is intended because remember, yields increasing on their own increase actual real world yields. Like, for example, I'll give you an example right now. By the way, 863 sitting on Tesla. A couple minutes left here. I was talking to a client, and I called up a mortgage broker myself, and looking at rates for a hot second up here, and just the job owning itself can get mortgage rates up substantially. I was talking to a client. They're like, I was talking to my mortgage broker, and they said in the last week here, they're actually rates have gone up. They already got pre-qualified, so it doesn't matter. But even that hawkish talk increases. From the bank's perspective, increases their rates. And so increasing rates, you already have that effect in the market without you having to increase the Fed fund rate, at least in like the free market sense. Now, of course, they're going to have to increase the Fed fund rate for the banks to stop the borrowing at those levels. But really, with consumers, it's already happening. Someone says happy birthday, Ganesh, and I appreciate that, but it's not my birthday. It's not my. I don't know. There's always one person, I don't know who it is, who always starts the rumor on the stream that it's my birthday. I mean, I'll take the good wishes, but it's not my birthday. Okay. Kenton says, yeah, actually, it feels like someone knows something, like something's about to happen. What makes you say that? I mean, I would categorize today's Tesla sell-off. We're down 4.5%. as just taking the NASDAQ, which is down 3%, multiplying by 2, a beta of 2, a leverage beta of 2 on Tesla. We should, in theory, with a beta of 2, be down 6%. Tesla's down 4.5%. Today is a product of the macro markets, I think. And again, remember, supply chain issues as well. They closed that ambassador bridge between Canada and the US. A lot of autos have been closed. So, folks, man, is this it's a running joke? You guys are just happy. Whatever. I'll take it. Whatever. You guys are aging me like crazy, though, with the amount of birthdays I'm having. All right. Folks, we got a couple seconds here left till close. Thanks, Caesar, for reminding me to check all my contracts. I appreciate that. Can do a 1-over. I'm kind of paranoid on that sort of stuff. Oh, man. All right. 859.33 sitting on Tesla. Let me just see if that is... Oh, no, sorry. 859. Oh, give it a second here. What is the actual closing price, guess? Webull updates. Ooh, there's no way it's 860 on the dot, is it? All right, Google is showing me... let me pull up Google here. Folks, we have a discrepancy here because Google is showing me... Oh, no, there it is. 860 indeed. Okay, let's go into the YouTube chats and let's see who came closest at 860. Okay, you guys are seeing 862. Okay, let me see who came closest. Let's see here. Ooh. Well, Jonas says he's won. Let's see here. You guys try to fool me with you guys throwing that guess last second here. I'm gonna have to go on an 859. Sado says 859. Chandra said 859.21, 859.30. Oswaldo's pretty close. Sung's pretty close. I think Kustav might have won here. 859.64. Oh, well, hold on. I'm reading recent comments here. You guys are killing me with this. So who won this thing? Let me see. So the winner of the Tesla closing price guess, I think it's Kustav. Oh, no. Sorry. No. Again, that's a recent one. You guys are killing me here. I think it's Sato. Sato guessed 859 on the dot, and I don't see anyone guessing 860. Just guessed 860.83. So, all right, let's say Sato, you won. There we go. I'll send you some virtual juju through the camera, my friend. Congrats. Well, not a fun week. Let's pull up the weekly chart as we do every week here, and let's just take a look. Let me move everything here if I can. Okay. The weekly chart on Tesla looks like this. Of course, massive strength into November, a bit of chopping around as Elon sold. Elon sold his last little bit. Omicron started to hit around December. Delivery numbers came out, really strong way to open the week. $1,200 retest on the first, who remembers that? First trading day of January, hit 1,200, right? Feels like a year ago at this point. And then a substantial selling off. Yes, last week felt like a little bit of a consolidation week, but we pretty much ate that entire green candle up this week, starting the week at 9.25 and closing pretty much at lows of the week at 8.60, closing the week. It's not a great week overall. If you want to pull up if I want to pull up my trading view for a hot second and just look at how this relates to the macro market, because I think that is important to look at for context. Pull up the macro and let's pull up QQQ, orange line. There we go. Bear with me here, folks. And let's pull up the daily. Where is the Qs? Oh, hold on. If I can get this here. Where's my Q? Where'd it go? Let me add another one in here. I like TradingView, but sometimes there's all these bugs to make up with. Hold on one second. All right. Yikes, that's purple. I can't have purple going on here. Hold on. Let me change this to... Let's change it to yellow. All right. If that doesn't hurt your eyes, I don't know what else will. Okay. So... if we pull up macro for a hot second and we align, let's say, the highs of the NASDAQ with the highs of Tesla, you can see here, and let me just perhaps make this a little bit more decent. There we go. You can see here, the NASDAQ has sold off substantially. Tesla is still pretty much in that zone here. So more perhaps selling to come, but it feels like this was another flushing of the entire market overall. So, yeah, sorry about the eyes. So, again, we'll see what happens here following next week, but it feels like... actually, let me pull up Webull here and just do something real quick here. I'm curious. From the highs from the beginning of January, stick with me here for a second. From the highs of beginning of January, right? This is January, right? To right now, Tesla is down 29%. On the NASDAQ, from the highs of January, let's see, January 7th here, to right now, NASDAQ is down 14. So yeah, 14% beta of 2 gets us to, let's say, rounding up to 30, 14, 15%. So Tesla really just following in line of the entire tech sell-off. What's interesting as well to consider for a hot second is how well Apple has held up despite really what's happening. Apple, since January 7th, when we saw the highs of 182.94, Apple's only down about 7.5%. So if you're heavy on Apple in your portfolio, congrats there. So there it is. And of course, crypto is crypto. Pull up crypto. Bitcoin's at 42.5K. Cardano's at $1.10. ETH is flirting with that 3K average. So it is what it is. It is what it is. Hopefully next week, brings a little bit more positivity, at least in the world. And hopefully there's no war that gets sparked up over the weekend. Forget about the markets. That's just not something that we need. So Apple's like a bank. Yeah, for sure. Much love to everyone. Everyone that tuned in. Hour and 5 minutes here. If you're new here, hit subscribe if you want. If you want to join our paid membership on Discord, link for that Patreon is in the description. Much love. Take care. Don't know. It's been a hard week, but we will persevere. It is what it is, and hopefully we can join with positivity again and continue to have a good time, regardless of what it is. Much love, everyone. Take care, and I'll catch you in the next one. Thanks, everyone. Someone says go. Richard says go Rams. Oh yeah, have fun this weekend. Oh, every Friday I sign off by saying this. Don't tune out just yet. I say this every Friday. Turn off your phones. Turn off your TVs if you can, other than the Super Bowl or whatever. Spend time with family, friends, recharge, meditate, go for a walk, get away from the computers. Your portfolios are not going to change over the weekend. Use this time to recoup, whatever you need to do to have another week full of adventure next week. Hopefully better adventure, mind you. All right, guys, much love. Take care, and I'll catch you in the next one. Peace.